So how we started was we first talked a bit about finances and personal finances at
Yeah.
work. You were telling me about your friend. I think I mentioned my own plans a little bit.
Mm-hmm.
And then we went to that convention where we talked about
Yes, DX.
much.
Oh, I shouldn't drop that name. DX3. That was a conference that we went to. It was a digital experience conference, but that was just talking a lot of different types of companies came up and just talked about how they integrated digital into the business. But the thing I really want to call out is a lot of banks were there to speak, and in the topic about how a lot of banks are moving their business to become more digital, they know that at the end of the day, financial education is still a piece that they're truly trying to attack right now, because as much as we say the future is all about customers moving towards ATMs, iPads, digital, the retail, the physical presence is still needed because there's still a huge, it's not even a generation thing. There's still a huge population of people who emotionally, mentally, what have you, just need a physical person, a specialist to walk them through their financial inquiries. And
Yeah.
I think that's how you and I came to this conclusion where it's like, well, maybe, well, I don't know if we're indirectly helping the banks then, but I would say we'll help bridge that gap in some way where like you don't have to rely on people per se, but then if you watch our videos and tune into the topics that we're talking about, maybe you can find some relevancy into it and have your questions answered without needing to go to a branch or go to a bank directly and ask for help. That's
Yeah.
what we're trying to achieve here.
Yeah, definitely. And I think there's like we have some good thoughts on personal finance and just overall the um, if you will, the philosophy of it, kind of
Yeah.
how it relates to the rest of your life. So I think that's, we're gonna start with simple things. Like today we're gonna start with the bank accounts, but as we move towards more complex topics, I think that's where we're gonna delve more into the philosophy part of it, how it relates to the rest of your life.
Yeah. And I think before we kick off, like the thing that we want to talk about today is that we're going to sound like a broken record for all the videos because the key themes that we're going to keep emphasizing, every single thing always ties back to taking ownership of your finances. No one will care about your finances more than yourself.
Yeah, definitely.
And the second thing is having the level of financial responsibility. And then I think the two kind of tie together. But when I say financial responsibility is be mindful of what you're working with. Like a lot of us, and like you're gonna touch upon this in a lot of the other videos we're talking about. A lot of people have big aspirations. I want to be able to have a private jet. I want to be able to go on a cruise every year. I want to do this and do that. Be financially responsible and just be mindful of what goals you set yourself up. If you have big goals in life, that's great. But just do an assessment. How am I going to get to those goals? A lot of people say, oh, I want that magic number. I want to be a millionaire. Being a millionaire is actually not that big of a deal nowadays. Like truthfully thinking about it, if you have $1 million in Canada right now, you're not even guaranteed to be able to buy a house. Like
You can buy a condo.
You can buy a condo for sure, but like buy a house, like that's how standard of living has changed,
Sure.
at least in North America. So, I'm not saying like when you say you want to be a millionaire, what is that relatable? What is that related to? Sure, let's tie it to a house. Okay, I want to have $1 million to buy a house. But what are you? What are you doing? What are you doing? So, without further ado, I think let's just jump right into talking about bank accounts, right? So, I think there's no better way for us to talk about bank accounts rather than me doing a dry run of talking about bank accounts. Let's do a bit of a role play system.
Sure.
So a brief introduction about myself is that I worked at the bank. I worked at the retail branch as a financial advisor. So I work with clients ranging from 16 years old to like almost like 75 years old. So at the bank account stage where someone doesn't know about it, I would say it's pretty much around the age of 16, 18, usually when you don't have a bank account yet, you first get your part-time job. So let's use that as a context.
Sure, yeah. In my experience, I've been 16 and I worked at a part-time job, so
Mhm.
I think that's relevant as well.
Okay, perfect.
So I'm coming to you, Matt, as a friend. I'm 16 years old, just got my first job, no bank account, have no idea about personal finances, and I just have a bunch of different questions for you.
Mm-hmm. Okay, so fire away. You came into the door right now, you want to ask a question, you want to know about bank accounts, and so yeah, what's on your mind right now? Like right now, what's holding you back from wanting to open a bank account?
It just seems there's so many things to know, right? Just simple questions like, I know there's a checking account and there's a savings account. What's the difference, and do I need both of them or just one of them?
Short answer, yes, you do need both of them. The key difference, not going to deep dive into all the little details of it because every bank offers different types of checking, different types of savings, but the purpose that they serve is universal. A checking account is to manage your day-to-day ins and outs. In and out meaning money coming in, like your paycheck, your part-time job income, random money that you'd be picking up, like gifts or whatever. That's the ins that are coming in. The outs are your day-to-day spend. I go out for dinner, I go buy a gift or pay for my bills, whatever. That's the outs. It's to manage your day-to-day expenses. The saving account is where you're putting your money aside. The saving account also provides a little bit of an interest rate to kind of entice you to save. But that's where, let's just say right now, I have a checking account and a saving account. I get paid $500 every week in my part-time job. Well, $500 come in, I'm going to park $300 into my saving account to temporarily put it away, and I just work with whatever I have, which is $200 left, and I'll spend it until my next paycheck.
I kind of understand. There's the checking account for money flowing in and going out. So
Yeah.
I can get my paycheck and I can, buy food with my checking account. But what's the point of the savings account? Why don't I just park the money in my checking? Why do I need the savings account?
Because it's all about budgeting, right? Think about it this way. If on week 1 you get $500, you spend whatever you want, week 2 comes in, money comes in, how are you going to keep track of that balance and how much is touchable and not touchable? Because we all have goals in life. We want to go on a vacation, we want to buy something. How many times have you had growing up your friends say, YOLO, I'll save my next paycheck? I hear it so many times, but unless you have a separate account dedicated for saving purpose, it's so hard to keep track. You're always going to we're humans, our base nature is to procrastinate. We're always going to think that we're going to achieve our goal at a later time. No, it's a behavior that starts from the very beginning, and that's what the saving account is to temporarily park your money away to grow up to a certain amount, and then it's to use it for whatever purpose you want, either to invest it, grow it even further, to spend it on whatever luxurious purchase. But you can't, like that magic bulk of cash will appear out of nowhere just sitting in your checking account. It's so easy to just, yeah, okay, I'll spend an extra $50 this week. I'll replenish it back the next paycheck. We
Yeah.
always say that to ourselves, but we
Yeah.
don't.
So it's just, I get it. It's just a way to separate money that you want to save that's harder for you to kind of take that and use it.
Yeah.
So I totally get it. I think that's a great idea. I have heard though, banks, there's a lot of different fees,
Mhm.
right? And I just want to know what should I know about fees going into getting an account, and are there anything I should look for in different accounts?
Ooh, that's a big question. Well, let me tackle the easier one first. For saving accounts, most of the time they're a free account, depending on which bank you go with. But most banks, they usually put some sort of withdrawal fee of some sort on your saving account, because it's a saving account, right? The bank wants to build a program or a product that entices you to save and deters you from wanting to keep touching that account. So they probably give you maybe like one free transaction a month, but after that they charge you X dollars per transaction. Usually not that much, like between $1 to $5. But again, it's still money to penalize you for touching your savings, right? Checking account, on the other hand, they're a little bit different because, again, it comes down to each person's like case-by-case usage. Some people like swipe their card so much because they don't want to carry cash. Some people just want to, paycheck comes in, withdraw one big bulk of cash, and then they don't touch their debit card ever, their checking account ever again, which is fine. So depending on your usage, you may pay more fees or less fees on what bank plan you choose. At a high level, as opposed to me right now explaining to you what are all the little fees that you need to be mindful of, you have to understand that times are going to be constantly changing. Something that costs money today might not cost money in the future. And a good example of that is, like, I worked at the branches 4 years ago. Back then, check return fees were a big thing. Right now, we don't really write checks anymore. Now we're all about e-transfers, money transfers, emailing each other money, wiring the money. But back then, if I wrote you a bad check comes in different forms. Either I write you a bad check where I didn't have enough money and I wrote you a check that was I can't even pay for, or something as simple as I made a spelling mistake. I spelled your name wrong, and then the person that would process the check said, you know what, names don't match, return it. That cost almost $10 back then, $10 to $15. But now it's not really applicable. And it's, as bad as it sounds, banks will come up with new features or whatever, and there might be new costs that are associated with it. So the short answer would be research. that's where we tie back to the original point. It's about taking ownership. You can go ask a financial advisor, but again, they're just people. Some people may be very brief, some people may be very detail oriented. It is up to you as a person to do the research ahead of time and find out all those potential hidden fees. Take the time, read the terms and conditions, see what relates to you, what doesn't relate to you. Certain fees, maybe you're like, hey, I don't even need this product because it comes with service ABC that I will never pay for. Maybe I'll just downgrade to a cheaper product and suit my needs already.
So Matt, I think that's really good advice. So how do I go about finding the right bank for me? So if I find plans that are sort of the same, should I just go with the bank my parents bank at, or should I kind of look for different banks?
I mean, that is one option because there is no harm in trying to falling within some level of comfortability to know that you're being taken care of by the person that knows like your family finances, can give you a little bit more of a biased approach to managing your finances. There's nothing wrong with that. But I would say in this specific scenario, let's just say you're going out in the dark right now and you don't know what to choose. I would say there's 3 different type of criteria you want to like consider. One is about accessibility, where it's about find a bank that's close to you, that's easy for you to access, because let's just say you're one of those kind of people that love visiting the branches or need to withdraw cash all the time. You want somewhere that's either close to where you work or close to where you live. The second one would be more about seeing whether or not this bank or this financial provider offers services or products that resonate to what your needs are. What I mean by that is, let's just say you're a customer that is I'm all about not paying as little fees as possible, and I'm all about doing everything myself. Digital is the best. Don't give me anyone to talk to. Then you might want to go with a provider that is more about providing you ATMs, digital services, and at a low cost. Sure, then that's a channel for you. Or some people will more be like, I need a physical person to provide that human touch for me, to walk me through all my questions. Then you need a branch. Then you need that. You need to go with a provider that gives you that. And of course, everything comes with a fee when it comes to that. The third one, which is I find most interesting, is find a bank, specifically a branch or a location that has the people that you feel you can connect best with. And I know this sounds very intangible, but what I mean by that is I actually had a client back then when I worked at the branch that did a little bit of a survey around the 5 branches around his neighborhood because he lived in a major intersection. And he just did a bit of a walk around to chat with the branch managers, chat with the advisors, kind of like chat with the tellers, really just to see who he feels most comfortable to entrust his finances with. At a time of need, does he feel like these people are friendly enough? Or these people actually care about him? Do they even care to call him by a first name basis? And some people look for that. And I don't think there's one cookie cutter right-wrong approach. It could be a hybrid of the 3 that I just mentioned. But those are the kind of like the 3 starting points I would always say. If you're never ever unsure whether or not you want to go with Bank A or Bank B, those are some things to consider. So that's the kind of thing I would end with that.
Got it. So I think that goes back to your other point about doing research and taking responsibility, where I should really go to a bank that I'm comfortable with, whether it's digital experience or maybe the people that I'll be banking with.
Yep.
The tellers or anybody that'll be helping me at the bank.
Yeah.
And I think that's really important.
This is a really good conversation, and again, this is just touching on like the basics of like personal finance 101. And the reason why we are here today and like in the coming videos as well is that we want to touch upon so many different topics like credit cards, financial responsibility, and a deeper dive version of it, investments, borrowing money, and how like the concept of FIRE, which I know you're very passionate about, and it's a concept of having that level of financial independence to retire early. Like there's just so many things about personal finance that I know you and I really want to touch on. And if we really want to, we can sit here all day for at least 8 hours talking about it all. But we'll save all those aside for separate videos. We'll wrap it up in today just talking about bank accounts today. Hopefully you or the 16-year-old version of you and the viewers today were able to just find some sort of value in it. We use a role play character of a 16-year-old, but whether or not you're 16, 21, 24, I don't care how old you are, if you don't have a bank account yet and you're struggling to figure out how to find a bank account or what's your first step, I hope this video actually helped you, because that's what we're here for.
Yeah.
We're here to help close that gap right now of people not wanting to go out and feel, I've heard these words, they feel stupid for not knowing certain things about bank. But again, finances, it's very simple. It's not really like the most complex things in the world, but it's scary to approach the unknown, especially when you're handling your own money. And we hope these videos are it's kind of like the band-aid solution for you for now until you actually go find the proper like solution and deep dive, do your homework and find all the answers from professionals as well, and then we'll go from there.
Great, that sounds good.
Like,
Subscribe.
comment, yeah, subscribe. We need followers, so yeah, do all those three things for us, and we'll see you then.
Thank you.